This is the Used Car Dealer Podcast.
Well, hello, everyone. It's the Used Car Dealer Podcast, episode 15. This is Zach here, and we have a great guest today, Charlie Chesbrough. He's the Senior Economist at Cox Automotive. Charlie, thank you so much for coming on the Used Car Dealer Podcast today. How are you doing?
I'm doing well. Thanks for having me.
Great. And for those listening, they might be wondering, what exactly does an economist do at Cox Automotive, and how do you become an automotive-focused economist?
Well, boy, what one does at Cox Automotive is I'm involved a lot with our economics team. We have a whole industry insights team that's focused on looking at how does the broader economy impact the automotive market for both new vehicles as well as used vehicles. And what does all that mean for our internal clients, within our long-term planning and strategy groups, as well as for our clients, and what it may mean in terms of their product portfolios or their own strategies that they may have going on. So we kind of monitor the marketplace. We monitor the vehicle marketplaces. We develop forecasts as to where we think the industry is going and sales and certain different segments of the market. And then we try to tell stories to our clients internally and externally as to what we see going on in the marketplace and how we can help essentially help them better understand what the metrics are telling us in the marketplace. And then how do we get here? Well, you go to a lot of schools. I went to Michigan State for economics a long time ago, and then the University of Illinois in Chicago for my master's degree in economics. And I've been working for a number of companies as an automotive economist since then. Spent some time at Ford and IHS, and I've been with Cox Automotive for a number of years. And the exciting thing about Cox is that we're a relatively big player in the automotive industry that a lot of folks don't really know about. I'm based in the Detroit area, and I would say that Cox Automotive isn't that well known up here, but we are involved in almost every aspect of the automotive industry once that vehicle is made. And we have our hands, the ability to look at all kinds of really interesting data as to what's going on in both the new and used markets.
And what's been your view of the dramatic changes in the economy from COVID-19 when it kind of first started in America around March to where we are today in terms of the auto industry?
Well, boy, we could spend the whole show on just that question. I mean, that we've seen so many moving parts since all of this started to happen around mid-March. I guess one of the interesting things that we saw in the data is massive changes in vehicle sales across the country, and we could really monitor the geographical implications of the COVID shutdowns. And clearly, you could see that governors shutting down the markets on the East Coast as well as in California and the state of Washington, that dealers were unable to even sell vehicles in many markets. And so we saw huge drops in retail activity. And as a result of that, the markets that were open at that time in the South and the southeast part of the country, they saw massive increases in their market share and their share of the industry's activity. But then once the governors reopened these markets, later in April and early May, we saw a complete reversal, that these markets that were closed before now started to really sell like crazy as vehicle sales really took off. And the markets that were open actually saw sales kind of stagnate a bit. And the COVID virus started to have some implications for them. So we've been seeing that real changes in sort of manufacturer sales and product sales around the country. But behind the scenes of everything, we're looking at these geographical shocks that we've had to the marketplace because of government policy as well as this virus have really been changing things quite a bit. So that's one of the interesting things that we've been seeing as a result of this virus. But in terms of what we've seen in the market more recently, is I think everyone has been very, very surprised at how quickly vehicle sales have come back. And I know the very early stages of all of this, and we saw the job losses that were piling up in April and into May and over the summer. We were all like, oh my gosh, this is going to be a really massive economic hit. Vehicle sales are just going to drop out. But we saw rather quickly that once vehicle sales were allowed to be sold again, and really probably the month of May was when we can really start to see the numbers improve. retail sales actually came back quite strongly, and consumers on an annualized basis, retail sales in both new and used is really down just a little bit. And it was really surprising to see that consumers were so eager to get their hands on vehicles, even in the depths of the recession and the virus itself. And I think that says a lot about the product. People really need transportation. They want transportation. Maybe in a pandemic, we've learned that vehicles become a necessary good rather than sort of a luxury good or a nice to have good. And so I think that's one of the things that we've maybe seen during this pandemic. But we also know that the government stimulus of a couple $1 trillion that was injected into the economy certainly had a huge implications for our industry in helping to get vehicle sales back on track. And that's one of our concerns going here into the fourth quarter here, is that stimulus happened a long time ago now, and it's not looking good for us getting another one. And so this economy could stall, and that's one of the things we're concerned about.
And talk to me about the interest rates, because now we're seeing like 84-month terms and things that we weren't seeing previously, kind of in this stimulus-driven corona economy, if you will.
Yeah, that's one of the things that we've seen in terms of a strategy that was employed when this pandemic hit. Is a lot of manufacturers went to low interest rate financing, 0% offers were thrown out there in late March and into April. And we also saw the introduction of 84-month financing, and that really is a relatively new term, that we hadn't had here in the U.S. market before. 7 years on a loan. It's fairly popular up in Canada. I've heard somewhere in the neighborhood of a third or 30% of retail activity does have these long loan terms. That may be one of the things we see emerge from this pandemic, is that long loan terms become much more popular. 72, 84 month, and who knows, maybe we're going to see even longer as this vehicle quality improves in coming years. But that's certainly been one of the factors that has been a big plus, I think, for vehicle sales during the depths of this pandemic, is that the move to these 84-month terms allowed monthly payments to make a huge downward shift. You were able to knock a big chunk off a monthly payment. If you had a loan, paying just a small percentage rate for 72 months, and all of a sudden you could get 0 for 84, you could knock $100 off your monthly payment very easily and end up with a brand new vehicle. And so I think that was sort of a real shock that did inject something in the market. But we've seen the manufacturers in general have backed away a little bit from those aggressive offers in the early days. But certainly interest rates, long terms, as well as the Savine interest rate, certainly did have an impact on the market. And I think we're going to see more of that continue going forward as well.
And are they doing 84 months on both new and used inventory?
No, not used. Generally, I would say in the used market, you're looking, at max a 4-year loan, maybe some 5s. But no, in the new market is really where you're going to get the very long loan terms.
So we've heard from some dealers that there are consumers who are not paying their monthly car notes. Like, what have you seen from the lens of an economist in terms of consumers and repo rates, or, failure to pay their car notes?
Yeah, that was certainly one of the early concerns that we had when all of this was hitting the fan back in March. Was, well, boy, a lot of folks are out of work, 30, 40 million people instantly unemployed. That's a lot of car payments that aren't going to get made. But we really haven't seen that spike in the data just yet. We are starting to see maybe a little bit as we get further out from that loan package. But a lot of the actions that Congress took in the early days of this virus, with the big bailouts and the extending unemployment benefits and increasing unemployment benefits, as well as accommodations made by many banks and lenders to help folks kind of keep their vehicles, keep their homes. All of that activity, we think, has been successful in sort of keeping repos from getting out of hand. But again, as we start going into this fourth quarter, that is one of the items that we're going to be watching, is that, do we see that? The other interesting thing we're seeing in the data is that interest rates for lower FICO score credit customers, your subprime borrowers, has actually been going up, even though we've seen other interest rates going down.
Interesting.
And subprime share of the market has been declining quite a bit in recent months. So the market's kind of moving a little bit further away from affordability, at least for those that are on the margins of their credit quality.
And correct me if I'm wrong, but this year is the first year since World War II where new car auto manufacturers have stopped production for a period of time. And that's had an impact on the 2020 models. Any commentary around that halt in production earlier in the year and its impact on the automotive ecosystem?
Yeah, it's been one of the, it's created one of the issues that the industry is dealing with now, which is a shortage of inventory. And essentially the factories in North America, if not the factory itself, the supply chain to it, everything pretty much came to a halt for the months of April and much of May. And the industry got behind in about 3.3 million units, I think, or somewhere in that neighborhood. In terms of production for those 2 months that not much was getting done. And yet vehicle sales, as I mentioned before, was actually coming back fairly strongly. And the shelves got picked bare. They were going off, they were selling the vehicles more quickly than they could get them back in. And now we're in a situation where the industry does have relatively weak day supply, certainly below levels we were at this period last year. And one of the concerns we have, again, going into the fourth quarter is, do dealers have the right inventory, the right color, the right trim package that everybody wants, or have things been, deteriorated in terms of product availability that it may cause some customers to wait if they can't get exactly what they want. And then the other question we have is essentially the whole model year rollover process. Generally in the falls, when we begin the process of getting rid of the old products and introducing the new products, this year the old 2020s, we want to get rid of them all. And we want to start reintroducing the model year 2021s, and it's changed. Companies introduce products all year long now, but there is still an emphasis sort of to do that here in the fall. Mm-hmm. And we're not seeing that there's near as many model year 2021s in the market this year as we had 2020s last year. And so there's just not as much new product out there as well. And so the fourth quarter is a big period for the luxury market. We know a lot of folks come out looking for a new lease because there's a lot of luxury leasing that occurs during that period. It may be that there's not going to be a whole lot of model year 2021s, the very latest and greatest product out there for consumers. And that may be a bit surprising for many shoppers out there. Again, we don't know whether that's going to hold back vehicle sales, but it would suggest it's just another headwind that the industry has to deal with. But we see that this inventory situation is likely to continue through much of the fourth quarter. Thus far, it doesn't appear to be holding back vehicle sales. They still seem to be doing quite well, but it does add just another layer of complication for an already a complicated market.
And what's been the impact on lease returns? I know, like, for a point in time, it might have not even been possible for consumers to return their lease, for instance, if they were in a state where their dealership was not operating due to the corona pandemic restrictions. What have you seen in that area?
Well, we did see a period early on that there was quite a bit of concern in the early days of the pandemic that these lease returns were going to come back, and nobody wanted ththese vehicles. Like, everyone was in a state of shock. Like, well, don't bring back your off lease vehicle because I don't want it. I can't take it. The industry was really kind of apprehensive about what to do with these vehicles because the whole market had kind of come to a halt for a few days. And there was a lot of panic around that, and a lot of manufacturers, in order to kind of mitigate that risk, we're asking many folks to just keep their vehicles for a few extra months. Don't bring in that off-lease vehicle just yet. But that's kind of moved past. We've kind of moved past that stage. So we're back in sort of the normal off-lease program. The fall, again, as I mentioned before, is a big period for many folks when their leases do expire and they're coming back to renew that lease. Our expectation is that leasing is down on a year-over-year basis, but that customer segment, the people who do lease a new vehicle, they're probably not suffering too badly as a result of this recession. They're generally a higher income person, higher credit score person. And our guess is that they haven't been in the crosshairs of the job losses of this recession. So that we may see sort of this off-lease activity in Q4 actually do quite well, just because those customers in large part have held up well.
So this summer, we saw basically peak wholesale pricing. We were hearing from dealers that in some cases, the price of a used vehicle might be very close to what that new counterpart was. And I'm curious, what sort of anecdotes or interesting observations did you have this summer in that kind of used car frenzy and when wholesale pricing was higher than ever before?
Yeah, I think in a lot of that we can attribute again to that stimulus spending that we got from the government, that extra money that was injected into the economy. A lot of folks said, you know what, I want to go out and get some new wheels, and we know that the new vehicle market has I don't want to say abandoned, but they have certainly backed away from the lower priced products on the new vehicle side, and there really isn't a lot to shop for under $30,000 anymore. In the new product side, particularly if you're looking for a crossover. And so there's just a lot more to choose from in the used side. And I think we saw sort of in the early days of the recovery period that people realized what a whole buffet of vehicles to choose from in the used market, and all stuff that I can afford. I mean, it's all sort of in that affordability range, in that $20,000-ish area. And so I think we just saw a lot of activity, and it really, it was really quite interesting to see the vehicle prices take off so rapidly. And we know that we've heard great stories from dealers that it was a very profitable summer, that they did very, very well. But I will say that we kind of see going forward, it's going to be more of a challenge, that the inventory levels have been drawn down quite a bit on the used vehicle side. There's just not quite as many of these as there was before. A lot of the normal supply to the used vehicle market of fleet companies kind of rejuvenating their fleets and sort of getting rid of old product and getting new product from the new vehicle market. That's been put on hold. People trading in their new vehicle or their old vehicle to get a new vehicle, that's been kind of slowed down, as well as repossessions and all of that, as I mentioned before, also being delayed. So we are seeing that there isn't a whole lot of new used supply, and so those inventories have been drawn down. But demand does remain quite high, and we're seeing vehicle prices out there still remain very, very elevated in the used vehicle market. But our guess is that that's going to start to change as well, as the supply kind of comes down, as well as we get into the late stages of this pandemic and the stimulus checks that we got. If we don't get that other stimulus check from the government here in the fourth quarter, which Congress has been debating here over recent days, that could have a big impact on these used vehicle sales, because folks just aren't going to have the money to continue the great run that we've had so far.
So what does economic outlook look like from the automotive perspective as we finish out 2020 and into early 2021?
Well, boy, it just seems like there's going to be a lot of uncertainty, and that's the one thing to be certain of, I guess. I guess it's the old Boy Scout adage, hope for the best, plan for the worst. At this point, the economy I think everybody feels like it's held up very, very well. The economy has come back from an incredible shock, but it's now settling down at about an 80% economy. It's not back to where it was before, and it seems unlikely that the economy is going to get back to 100% levels until we figure out something about this virus. It's just going to keep everything a little bit suppressed, and so that's a new reality that I think folks are going to have to adjust to. And so as we go forward, I think it's going to be a little bit of a malaise for the market. But our general guess is that we're just going to continue on the upward recovery path. It's just going to be a slow recovery. We're not expecting to see a V-shaped market recovery where everything's back to normal, in 2021. We think we're looking more 2023-ish till we're really going to start talking about the market getting back to where we all hope it will be.
And what are your thoughts on some of these new models, like for instance, online used car dealers or online auto auctions?
Well, I think anything that's focused on digital activity is probably doing fairly well during this pandemic. And I think if there's any kind of lesson that we can take out of the pandemic is that it does seem like dealers that have been focused on doing digital transactions, more focused on sales, where as much of the transaction can be done digitally and not as much face-to-face contact with consumers. I think that is something that was relatively new for the industry, and I think it's something that we're going to see much more of going forward. So, all these digital online companies, I think online is where our industry is headed in every aspect and in everything that we're doing, which is always surprising to me because I'm old school Detroit. I can't imagine buying a vehicle without going out and kicking the tires, but consumers are getting more and more comfortable with that, and so I think that's a trend that we're going to see continue.
And what are your thoughts on used car leasing and the subscription model, whereas it's more as like month to month versus like a traditional 24-month or 36-month lease?
I think there's going to be a lot of opportunity in subscription. If someone can kind of crack that code and figure out how to make it work, really the basic premise is that a dealer or some company or individual could buy that vehicle at a much lower interest rate than the customer that they would be subscribing to could possibly get. And there's a large portion of the market out there that's paying double-digit interest rates when they buy a vehicle. If a dealer, for example, could finance a 3 or 5-year-old vehicle at a 3 or a 4% interest rate and be subscribing that out to folks who would normally pay a 15% interest rate, there's got to be a way to capture that margin, as well as the cost savings that there may be for providing service of that vehicle within the dealership, and the ability to sell that vehicle whenever is necessary. I think that there's real opportunity in subscription. I think that's an area we're going to hear much more about here in coming years, particularly given the price of vehicles these days. I think it's just going to get more and more expensive, and we're going to have to come up with creative ways to help folks figure out how to afford these vehicles.
And my last question, and this is more of kind of a futures type question. What excites you, whether it's something that Cox Automotive is working on, something that you're seeing trend-wise in the economy about the future? Because we've been talking about Corona so much, and that's kind of a downer for a lot of people. But what's exciting that's kind of coming down the pipeline in terms of innovation in the auto industry, or kind of unique economic insights that you have?
Yeah, well, if I had to choose one, it might be an obvious one, but I think that the electrification that is coming, I think, is very, very exciting for the industry. And I know there's a lot of doubting Thomases out there. I often include myself in them, that consumers are not going to go for these electric vehicles. There's no charging stations. There's a litany of things you could come up with about why this isn't going to work. But I think the world is deciding it's going to go there. And I think we as a country have to figure out that at least we have a large portion of our fleet that way, or else we're just not going to be participating with the rest of the world. And I think that limits our ability to sell products. So I think it's important that we do participate. And I think what the products that are going to be coming here in the next couple of years, Rivian's going to have products out here in 2021. Tesla's an incredibly exciting company. And there's a whole bunch more of new electric companies that are coming. It's going to be a lot of new and exciting products out there that consumers haven't seen before. And for folks that are fans of cars and the whole history of the automotive industry, I think we're about to enter one of the most exciting and innovative times that the industry's ever had in terms of the products that are going to be coming here in the next couple of years.
Well said. And Charlie, I appreciate you so much for coming on the Used Car Dealer podcast today. And you've had some really interesting perspectives on the industry. Thank you so much.
Well, thanks for having me. Happy to do it.